So this is the pre-market analysis of 30th of July. It's Sensex expiry. We have a lot of things to discuss, and then we need to plan the trades accordingly. Things have changed overnight with respect to oil price, with respect to US-Iran, escalation, with respect to the Fed Reserve. So US Fed Reserve actually kept the interest rate unchanged, but the hawkish Fed chairman press conference we need to discuss. And as a result, what we have seen is a sharp fall in the US market we need to discuss, and then renewed US-Iran military escalation. There were attacks yesterday after 3-4 days of halt, and then as a result of it, you can see crude oil prices jumped around 7%. But Gift Nifty is indicating not much gap down. There is around 60, 50, 60 point gap down only. And still, there is a positive arbitrage when it comes to the ADRs. That's actually positive. So, all these are the things that I want to discuss in this session. Quickly, we'll try to do that. So, see, before the policy announcement, markets, US Fed decision, if you're talking about, markets were concerned that the Fed Reserve could unexpectedly raise the interest rate because crude oil prices rising, inflation concern is there, and also the CME Fed Watch have increased, indicated around 30 to 40% probability of a 25 basis point cut. Because of that, US market was coming down, but Fed Reserve kept the policy rate unchanged between 3.5 to 3.75%, and this was a sixth consecutive pause. So immediately after the announcement, in fact, US markets have actually reacted positive because there were expectation that there can be a rate hike and the market were coming down. Now, before the decision, if you see S&P was down almost by 1.2, and after the decision, it covered most of the loss and briefly, in fact, moved to the positive territory. Now, if you look at the supporters, 9 members have supported for no change, and 3 members have supported, the 25 basis point hike. So majority is with no change. And then comes the press conference, right? So the market expected two forms of reassurance. One is basically an indication that rates would not rise at the September FOMC meeting, and also some flexibility regarding this inflation 2% target. But it was not provided. So the inflation target remains strictly 2% itself, but there is a high probability that inflation may increase because of increase in crude oil. So there can be a possibility of rate hike. That is what the market has understood, right? And the Fed would not permanently tolerate any inflation in anything above 2%. So he also stated that, more than 5 years of, this above this target inflation, it could not corrected by, one softer inflation reading that you got this year, basically what you got in June. So that inflation data may not be sufficient. You need long-term data. So there is a risk for September. There is a hike risk. So the market interpreted basically like the September rate hike still possible, and the Fed is not yet satisfied with the inflation progress. And he also noted that US economic growth actually solid. So when growth is good, you don't want to reduce the interest rate. You can increase also. Then your priority will be inflation, and the labor market is also remain stable. So the economy remains strong. So what you need is there is a possibility Fed still have room for raising rate cut. So that is the hawkish market reaction, right? US bond yields have rose sharply, and equity market actually reversed their recovery. S&P again have fallen almost 1.5%, and Nasdaq 1.74%, and Dow Jones is almost 2.18%, and VIX increased around 13% and closed above 20.5. Apart from that, AI and semiconductor stocks are showing that weakness. Now coming to US-Iran conflict, there is a fresh military escalation is going on. Iran launched a surprise missile attack against US forces in the Middle East. US and Saudi also attacked Iran-backed militants in the Iraq. So that is basically he's telling us or suggesting that the conflict pause is now almost over. It is again coming up. Yesterday, I've discussed about some Oman-Iran proposal. So Oman have not formally accepted nor rejected. So that's still there with respect to the Strait of Hormuz. If you look at crude oil price, it's increased almost 7%. WTI is around 82. Brent is around 88. Now, Gift Nifty, if you look at it, I think it's trading around 24, 250 level. So if you adjust it with the premium, that will be 228 level. So you will be getting an opening around 24, 160, 170, which means around 70 to 80 point gap down is what we can expect. But if you look at the ADRs, ICICI is positive. ICICI, there is negative arbitrage, but HDFC 2% positive, Infosys positive, Wipro's again positive. So ADR, if you look at it, ICICI is showing some weakness, but rest of it is looking positive. So overall, the hawkish Fed Reserve communication is actually what let the US market come down, and there was a sharp decline in US indices, and there is a higher US bond yield also, and AI and semiconductor stock, that weakness is continuing. Iran-US escalation is renewed again, and you can see fresh taxes happening after the post. And because of that, crude oil have jumped almost 7%, and ICICI ADR is showing weakness. But Fed did not increase the interest rate. That is positive. GIFT Nifty is not showing much, despite US market have fallen almost 1.5 to 2%. Now, if you look at it today, it's Sensex expiry. And if you look at yesterday, FIIs were net buyers of 3,000 crore. DIIs also almost 1,000 crore. So there is a possibility that FIIs can still take the market higher. Yesterday also buyer, day before yesterday also, FIIs were buyers for 750 crore. So if there is a gap down, there is a probability that it will be bought, right? If you look at the open interest also, new call open interest is around 21%. Put open interest is around 35%. And the PCR, if you see, it's improved to 1.16, which is actually very good. Again, if you look at the participant positioning, 15.7% clients are bullish, prop traders 5.1 net bullish, FIIs almost 20% bearish. So retail traders and prop traders are looking bullish, FIIs are looking bearish. So these are the things. Now if you look at it, we are getting an opening at around 24,170, 200, or yesterday's high is the resistance, and 24,100, and then 24,000 will be the support level. Could be a tight narrow range again, because you are not getting any positive cues further, but there is negativity also. So there is a possibility that it can come and touch 24,100 or even 24,000 also. So be watchful and trade carefully and responsibly. If you would like to trade with us in the live market, we have the live market mentoring program. Talk to my team, join the session, and I see you live in the market. Thank you.